The industry I'm going to present now is much older and much more physical. It relates to railroad and the lighting segments. Actually, we're over 160 years old. The company was founded in 1862. Sächsische Bronzewarenfabrik in Germany, that's the SBF name. And then we went on to producing chandeliers, beautiful, huge things. The Reichstag building, when it was built back in 1894, was staffed with our chandeliers. And in the 1920s, we focused on more functional lighting systems for ships. This is a famous ship that we equipped with lighting. And the first stock market listing we did in share issues in 1923, with, of course, being located in Eastern Germany. And having had a world war since, this might or might not have been a good investment back then. But we started focusing on lighting systems in rail vehicles in '68. And in 2007, we're the first in the world to introduce LED lighting and ceiling systems for rail vehicles, and have been focusing on that ever since. In the last few years, we had two acquisitions. One was in public and industrial lighting systems, basically going back to our history of manufacturing lights. Also, they're not huge chandeliers these days, unfortunately, but still they're very functional. And a second company that we purchased as electronics has become more and more important for us. It's not just the lights, it's the smart systems behind them. And we ventured into that. So I'd like to introduce to you the company, the three segments: rail vehicles, the industrial lighting, and the sensor segment, and the financials. Overall, the company, let me just move this so that I can see the screen better. The company has made 21 million or 22 million of revenue in the first half. So we're approximately 40 million euro. Our EBITDA at 0.4 million is too low. Our ambitions are, of course, higher. And I'll certainly share with you what's going on and what we're doing to do that, with about 340 employees. And the three segments, the rail vehicle segments, makes about 44% of the revenue, about a quarter the lighting systems, and the newest part of the group makes a third of revenue. What has become much more important in all three segments over the last few months and years really has been the issue of critical infrastructures, because for a long time lighting was just about usability, about function, but and also, of course, in train interiors, but also public places. But they have become much smarter, and with critical infrastructure becoming more important. For example, as you might have noticed, that the KRITIS legislation has a few weeks ago been expanded, not just data cybersecurity, but also physical security and so any type of security of public bases and critical infrastructures, and railways certainly are a critical infrastructure. So these types of security issues have become a lot more important for us over the last few months and years. Now, but still one thing, of course, that drives our business is efficiency, energy efficiency, both moving from airplanes to cars, buses, railways. Railways are still being pushed the world over as being the most efficient means of transportation, and also in terms of lighting, of course. I mean, if you look at Germany, probably 40% of public lighting systems or street lighting systems have not been upgraded. We still have a lot of gas lamps in Germany at this point in time. And so that is also a transition that is going on, and that will certainly drive our demand very strongly. In terms of the rail vehicle segment, we had about 11 million euros of revenue in the first half. Um, what you will notice, and I will explain a bit more about that shortly, is the order backlog of about 100 million euros. We have maintained this backlog for quite a few years, and I'll shortly explain to you why we have such a long backlog and what that means for us. And of course, we also have a big bunch of orders outstanding, so there's a strong pipeline in this market segment. Um, if you look at the market overall, it's much driven by passenger transport and urban transport. These make over 60% of the total market, and it's a growing market. It's not a not a rocket in terms of growth, as you can imagine, but it has over many years consistently brought about 4 to 6% of growth, driven by energy efficiency, by kind of transitions in urbanization and traffic. And while our customers, they are the train manufacturers, they're Stadler, Siemens Rail, these types of companies. They're mostly located, let's say, about 200 kilometers from our headquarters. So we do have close relationships with them, but their customers are global. And that's why our products indirectly are also very global. For example, if you take the magnetic high-speed train in Shanghai into the city from the airport, the sealing systems and the lighting systems come from us. And so we're really go for a global market mentally. Um, how did we develop over time in this market? Basically started with interior lighting systems, and that was kind of the first part. The second stage of expansion was um, to source into ceiling covers and the air conditioning systems behind them, because there's huge channels overhead to transport all that fresh air in and out of the cabin. Then we went into the market of exterior lighting systems, front and back. Of course, there's not that many lights in the fronts and backs of trainers throughout the whole thing. But still, it was a rounding off of our value proposition. Then, especially in urban transportation, handlebars, luggage rack systems, things like that have become important. And these days, as I mentioned, active safety systems have become important. The monitoring, the emergency situations, emergency evacuation routes, emergency lightings, things like that have just become more important. And we, of course, are happy to be part of making riding a train a safe value proposition. Now, coming back to the order backlog, you might wonder how we came about such a big backlog. On the left-hand side, you find one case study that was basically started in 2009 when Bombardier and got an order from Deutsche Bahn for the delivery of 800 trains. When you're based in Germany, you know those double level trains there all over the place in regional transports. And and the requirement was basically a design requirement. You see those luggage racks there with those bluish squares. They're made of glass, and the key issue was to make sure that the same lighting maintains throughout the whole glass panel. But it also needs to be sturdy. I mean, people put luggage up and down there, and the thing needs to run for 25 years through all types of weather and stuff. So it's not just design, it's also a lot of functionality. And so we basically ended up filing a joint patent in 2010 together with SBF and Bombardier. And since 2012, these 800 trains are being built one by one after another. And whenever the interior cabin is ready to take in our part of it, then we deliver additional components into the train, and that's why these things take so long, and that's why we have so long running orders. And basically, if you look on the right-hand side, you see how that works. We've got an order inventory at the beginning of the period, and then there's new orders coming in, mostly driven by the market. Are there any new train systems being built? Are we the ones who win those contracts? That's the addition. And we've always kind of that has been a long-term market where we keep winning new offers and getting bids and adding to that. So that has been very consistent. And on the other side, of course, once there's a drawdown and the orders are pulled, then it reduces again. And these are driven by the calls. Basically, are the trains being produced? And then also, of course, our ability to deliver. And we had some time during the COVID or shortly after the delivery shortage of the COVID period, where we were the ones who were not able to deliver and bring product into the train. But mostly that we have fixed. Actually, all of that we have fixed. And at this point in time, it's a question for us of the calls coming in. And that is something that has been on and off, stop and go, because these really complex systems, these trains, and there's always a reason why there's a stop and the projects keep going again. And I mean, since we have been doing that for over 50 years, you can imagine the whole company being geared towards this stop and go project starting. Then we have to park them again. We've got storage facilities and then unpack them and get going again. So that's, I mean, it's a wonderful, very reliable, very long-term business with close relationships. But of course, the one thing that keeps us busy is the stop and go nature, and that's why the order backlog of 100 million approximately. Is a matter of the time lag between very long and very short projects. But that keeps being there, and certainly there's going to be called. It's not that they're all going to be called in the next 1 or 2 or 3 years. It's really long term. Some are very short, but some go over the next 15 years. So it's very much a mixture of different durations or different timelines. Okay. The second segment is made 4.5 million of revenues last half year, or the first half of 25, down from 6 with a much smaller backlog, but still strong order space. And there we basically serve three main markets, one being rail infrastructure again, this time the outside train stations and all types of facilities surrounding the trains. Um, Municipalities, cities, public places, and industry. In terms of industry, imagine large parking lots or interior logistics facilities, things like that. It's really functional lighting that we offer. It's not design lighting. Here you find some of the products that we have and two examples that give you a sense of where the market is going and where we have been going, and also why electronics have become so important to us. On the left-hand side, you find a street light system that we offer. And what you see there in the middle is a smart box, which is basically the electronics components. And they're very easy to plug into the thing and take it back out. And the reason we have that is because municipalities have been saying, well, we don't actually know what our requirements are going to be 5 years from now in terms of the functionalities beyond lighting. Of course, lighting is a given, but some of them might have public Wi-Fi. Some want to use it for traffic monitoring and steering, weather monitoring, steering. Public charging stations are going into this. So it's been, of course, like sensors to make sure that the lighting itself is being dimmed to reduce energy further and stuff like that. And so that keeps changing. And the use case here is that the municipality said, hey, we're not sure, we'd like to exchange them. And that's why they have this box where they can take out the existing one and put in a new one with new electronics and new functionalities. And that makes their investment more reliable and gives them a longer planning phase. On the right-hand side, you see kind of long strip light systems, and they also have become very modular. It's not just lights, but between those connections. And imagine these lights kind of going on for 100 meters throughout a whole parking lot. And there's sensors in between. There might be power connections in between, all kinds of things. There's emergency lighting requirements and stuff like that. So it's more than just light. It has more and more become the electronics between the lights or adjacent to the lights have become more of a discriminating factor rather than just being able to bring in the light. So, how did this work, this segment for us? We purchased in an asset deal in 2020 a company called Lunux, and in 22 a second one called Nedeon. And and the initial idea was because Linux had some large production facilities in the Czech Republic. Our plan was to basically integrate all the production in the Czech Republic, and we actually started kind of disassembling the factory hall. Imagine two football fields full of containers and components, machinery. And then Corona came, and we were actually not able during the initial phase of the pandemic, of course, to travel, and we couldn't get into the company that we had just purchased, basically. And so we had to stop the relocation process and basically find a site in Germany so that we could maintain production. Had to sign a 3-year lease on this, quite expensive lease also. And basically we're stuck in Leipzig, and only in the last few years, and especially in the last year, we were able to put it all together into one place as we had chosen. So that is one problem we had in this segment, is that our cost structure was higher than we really had hoped for quite a while. We're done now, and we have done that homework, but that is something that has been dragging us down in the segment. Another one has been a difficult market environment. Initially, after the Corona pandemic, you might remember all the supply chain problems. We were not able to get the electronics we needed. We were not able to deliver. Then after that became better, we ran into a phase, as you probably remember, of high interest rates, which basically shut down the construction industry, and there was very little public construction, very little, few buildings for a while, and so we lost an important customer segment. And now what we came into was the infrastructure package, the 500 billion euros that was decided last year, which I think is a good program. But the effect it had was that municipalities just stopped investing. They're waiting for the money to come from the federal government. And if you talk to mayors, they're all happy and they want to go, but they don't want to invest now. And if you look at the timelines behind that, the decision how to distribute the money just regionally was being into the federal states was being done, I think, by October, November last year. And so it's starting to trickle down into the municipalities. Our estimate is that this year and probably most of next won't see a single euro being spent of this money. It just takes a very, very long time to trickle down. And so that for us also was a factor that in the long run, I think is going to play into our business very strongly. In the short run, it led to a stop. So here's to give you a sense of the machines we have running there. They're very large. The one on the top right-hand side, it doesn't look so big in this photo, but it's over 100 meters long. The thing we built these strict lighting systems and have significantly reduced cost. And are basically focusing on our 3 markets and a lot of efficiency with OEM partnerships. The third segment we went into, basically 7 million of revenue, consistent. Last year was a year of integration, mostly learning how to use their products. And the market is one that is growing strongly, both the electronics manufacturing markets and also the security and defense markets that we're covering. I mean, as you know, Flensburg is a big German defense locality. There's a very strong growth in the market overall, and our position is we don't just do the printed circuit boards, but we do the integrated system. There are some of it is manual manufacturing, something is the casing around specific customer requirements. That's how we as a mid-sized company are well positioned. And that is something if you think of it, for example, how to use that as part of the group. You see on the top left-hand side, you see smart meter systems with Wi-Fi. These are the type of integrated products we're well positioned to do. And on the below that, you find a piece that's it's not a beauty. It looks like an industrial um, 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 computer, which it is, of course, but that is a joint development that helps us in terms of guiding the lights in a train. And if you think of a train moving with 300 kilometers per hour, there's a lot of changes in lights in terms of the weather, reacting to sunshine, the time of day, and things like that. And that has been kind of bi-directional lighting control has become something that is so important to us that we now are happy to have that resource inside. Okay, the revenue and again the EBITDA, just to give you a sense of that. Our EBITDA has been a bit stronger because we have one customer of about turnover of 900,000 euro that went into an insolvency proceeding, but will probably come out of it in some shape, and the product or the project is going to be continued. So it's been a bit better than that, but still. It's still low and is at this point in time still driven by the segment. And I talked to you about the things we're doing to improve that. I think I'll skip over the numbers now, running out of time. You'll certainly have that information if you want, and go to our forecast. We're forecasting for 26 a revenue range of 38 to 45 million, which is a kind of we think we're going to end up with 45, which would be a good but not a very fast growth because we're being a bit cautious. We think it's going to develop into good growth here, and we've got a lot of initiatives that will support that. But we also find that given the public market, given the recessionary environment, we're not entirely sure, and that's we decided to basically broaden the range down to be sure to not disappoint you. Same thing with the EBITDA. We will continue a strong EBITDA growth, and we have lowered costs and improved a lot of things. But again, we want to be on the safe side in terms of the commitment we give. That's why we decided to broaden this range for the year. Okay, I'm running out of time, so I'll stop this, and I'm looking forward, Matthias, to talk to you, and I have 5 minutes left to
Yes.
share ideas and your questions.
We have already a few questions in the chat. So, first of all, you focus on trains. Do you also do solutions for automobiles and airplanes? And is the defense market relevant for you?
The In terms of autumn, I mean, of course, there would be trains, buses, and automobiles. These are not markets we are covering at this point in time. They have different dynamics, and they're really quite separate from each other. And so we have looked into it, but we have so far not really found a good entry into those market. And I mean, it's a fairly large market where we're currently in, and so we're at this point in time wouldn't expand into this market. In terms of defense, let's put it slightly different the security market. I mean, if defense is military and security also includes things such as internal security functions, the safety and security of transportation of critical infrastructures and things like that. We're definitely active in those. We have been in the past and are certainly finding this more and more attractive and important. And being based in Germany, of course, and also having long experience in highly regulated markets. I mean, train systems, they do have extreme certification requirements. We, for example, even have engineers that are certified gluing engineers just for gluing sealing systems together. So that there's a lot of regulation that we're used to dealing with. So we think we're well positioned to also build that.
And can you comment on the development of the competitive environment during the past 2 years?
Um, we find it quite stable. I mean, if you look at just to give you the bigger picture, also on the customer side, if you look at our 100 million of order backlog, then have a look at the order backlog of our customers, of Siemens Mobility and Stahler Rail, and you will find they have huge backlogs as well. So we're overall in a market where the whole system is building. There's a lot of pull from the customer side, and the whole market is trying to deliver and get these complex systems produced. In terms of our little niche, which is only maybe 3% or so of the total spending on a train, there's a handful of competitors. We find, of course, that we have to work on innovation, and everybody's trying to innovate and have some ideas and jointly develop them with our customers. In terms of the pricing competition, we don't find that it's hyper aggressive. Of course, we need to be able to be cost competitive, but it's not one at this point in time where we felt that our customers are trying to strangle us, because they have made the experience that there were a number of train suppliers that went out of business. They just couldn't do this. In our segment, it's so individualized. Every project is different, that it's really a group of European suppliers that are being treated fairly, I would say, from our customers, and so we're not killing off each other.
Okay. So with about 30 seconds left, can you give us an idea why we should all now invest in SBF and where the company could stand in a couple of years?
I think we're in a growing market, and we're well positioned to benefit from the growth in public market segments and also in our train segments. We're well positioned in terms of the electronics to really be more and more proactive in the defense markets. And also, I mean, being a manufacturer, we have great scale effects. So relatively small changes in turnover will significantly increase our profitability.
David, thank you so much.
Thank you, Matthias.